to another wonderful edition of Trading Fast and Slow, where we track value and not price and stay on the right side of the market. First thing we are going to do is jump over to the monthly chart because yesterday was the month's end, and what an end to the month it was. So, as we can see here, looking at the monthly chart, and let's take a different look kind of at this and see if we see anything that we see anything different, really. So this is the SPX. It's the index that tracks the ES futures, or the ES futures track the index, right? This is a cash only chart, but you can see we're not extended above that downtrend yet. And you can see the 20, the 50, the 100, and the 200 are all kind of just trading in unison here still, right? At least for the past, since whatever this is, 2013. This is the SPX index on a monthly basis. So what we can kind of gather from this is that the one time framing down is definitely subsided, and we're basically pushing right up against trend, right up against this level. So now pushing back to the ES, as we can kind of assume that it pretty much is exactly the same. You can see the ES is kind of breaking out of its trend, the futures, right? Because the way the contracts work. That's the only reason I really wanted to show you guys the SPX, is to not get you too overly excited about kind of what's going on there, just in case. But we are getting close to that 4150, 4130 level that we talked about from yesterday. And a key thing that I wanted to bring up is, a couple of weeks ago we talked about how excuse me, a couple of weeks ago we talked about how Powell was kind of trying to say a secret message, right? He was kind of trying to get us, Lecker, good morning. He was kind of trying to get us to read between the lines, right? And we did that. And that was, when we look on the weekly chart, we'll take a peek back at that week. But he was basically saying that at least how I interpreted it, that he was saying the time to buy is not when I say that we're going to start softening rates, it's when we start flattening. And we had kind of talked about, if we pull up the Fed funds rate, so here's the Fed funds rate. You could see yesterday, it looks like it went back to that, or it went down a little bit. Yesterday's probability was 83, it's 80 now. Where is, what do we want the dot plot? Morning, Roach. Where's the dot plot? So we can see on the dot plot here, and this is something that we talked about, right? How it kind of tapers off, right? Yeah, we get some raises into 2023 up to 5%, but then 2024 comes down. 2025, there's still one Fed that's probably Bullard, who just wants to crash the market. And then everyone kind of sees the longer run rates coming back down to like 2.5, 3, 2 area. And so we had kind of determined, like, okay, into the end of this year, I guess we're going to flatten, because we're pretty close to 5 right now, right? If we go back 2 pages, we can see we're at 4. So we're only 2 rate hikes away. If we know there's going to be one in December, if that one's 50 and then we do one more in January for 50, that puts us right at 5, which is where we want to be, where the Fed wants us to be, in order to combat the rising inflation. Well, we're only a couple meetings away from that, so we're good. And that's kind of what we had assumed that he was saying. Well, now at this last meeting, or yesterday's meeting, kind of got tricked into it, and that's kind of what he was saying. He wasn't saying that we're good. He was saying that we're getting very close to flattening. And then he also said something like, we don't know what restrictive looks like until we stop raising rates. And so basically he has to find out by not raising rates through one of the meetings to see how effective their restrictive policy is working, right? And so that's the big catalyst of yesterday, is basically people were kind of like, they're starting to see the turn, right? So let's go back to our weekly chart now that we've kind of and we could see, and here it is, back in October 10/10 when we made that big low. um, that was the that was a big Fed day, right? And then the most recent raise was on the 7th, which was this week. Big move up. So we're holding a pretty good trend off of the low on the weekly, and we're one time framing up on the weekly. And so we've got to assume, at least until this trend breaks, that buyers are in the market and they're looking to, test higher prices. Not necessarily saying that, the market's just going to go to all-time highs from here, but just saying that you have to be careful. Now, the caveat to that is we identified that's what Powell was saying months ago, a month ago, right? And we were getting long bias. Well, now everyone's identifying it right as we're coming into a resistance, because I'm seeing it on a bunch of YouTube channels about how Powell said yesterday and blah, 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 late, like most people. And so now I'm kind of thinking like, well, everyone is going to wanting to be to the upside. It would make sense for them to try to give that flash in the pan down, and then get the rise up as the Christmas rally, right, that they talk about. I don't know if we have enough time for that. It is the first of the year, and there's a lot of holidays, kind of a lot of holiday time built into this month. Um, yeah, I definitely will watch that game, bro. Definitely. So switching over to the daily, you can see we finally broke out of this balance here, and now we're up higher. And so really the key is still going to be that 40-50. Pull back to that 40-50. Even a pullback into balance that doesn't break lower balance could still just be a look above and fail, and get back into balance, gets accepted. You're looking to trade down here. Um, and so now I would say that oh, hang on, I'm getting a phone call. One second, guys. Hello? Sorry about that, guys. So jumping over to the profile, you can see yesterday, and this is, and oh, hang on, I'm on an echo. Oh, okay. Um, Yesterday's profile, and we called this out early in the Discord. We didn't stream yesterday, but we were in the Discord live. If those of you guys that are in here now are not tuning into the live on the Discord, you're kind of missing out. So you really should do that, because there's a lot of good conversation. It's not always about the market. When the market's slow, it's good to just get to know your fellow traders sometimes. Um, we talked about football and how it's actually called soccer. So there's a lot of good stuff in there. But yesterday, one of the things that we noted was when this FG came down and didn't take that prior low, and then G came up to right around here and just kind of hesitated, right? It really didn't do much. And I actually got long on the 48, and then I had my stop on this poor low here, and we had taken a screenshot and posted it and said, this is a weak look from the market. It can't even break the previous day's low, and yet everything had been assumed that it was all selling. Well, we were already, kind of preemptively onto that and assumed that the selling was old business due to the B-shaped profile, and we ended up getting long low, and then we ended up getting long again above the open. And the market squeezed up for the rest of the day off the PAL statements, right? Not that I was expecting it to really shoot up as much as it did. Obviously, I had no idea. Anyone that says that they knew is just a fucking liar. I really was just trying to trade these back to the 81, the previous day's high. That's all I was trying to do, but got lucky. But basically, that's kind of how we were able to like predetermine the weakness and manage risk at the same time. And so the market squeezes up, leaves single prints, a bunch of different distributions, turns into a trend day. The breadth started trending, the weighted AD started trending, the tick looked good. Yeah, the screenshot was at 23 points, but I ended up closing it for 50 points yesterday total. If I would have held it, if I would have held it till the close, it would have been a 100-point trade, 84. Yeah, 100 points. I should have listened to myself and carried the one into the overnight, but it was just up so much. I was just like, you know what, fuck it. Anyways, so Globex overnight inventory pretty much 100% net long. Maybe not exactly 100% net long, but I mean, kind of close, I guess. Maybe 80-20 here. Excuse me. Opening on a gap, so we're going to say gap rules are in play. We just broke out of balance right yesterday, so balance rules are in play here. Basically, the most bullish thing that we could see is a just continuation, no gap fill. The breadth is going to open up, hopefully nice and positive, and we just get that continuation right off the bat, and it's just a go with situation. All right, so that's kind of scenario number one. Scenario number two is if they pull back inside yesterday's range, can't get much below the settle, can't even get back to this VPOC, and even this VPOC is still a buyable trading range to get long from, to target, back up into these previous singles in the gap. But below that, it starts to get a little bit slippery, and then you're going to have to wait. You might even be able to get short under here, under this 40.74, and try to look to target down into these singles. It's really going to depend on the tone of the day. I'm not sure about any more economic data. Let me see here. Best thing. I think there's some actual data. Well, Fed Logan's on in 4 minutes, so 5 minutes before the open. Then at the open, Bowman's on. Then we get PMI. No. Yeah, PMI 24 minutes. So at 9:45. And then there is ISM manufacturing PMI at the top of the hour. So there is some economic news coming out still for the rest of the day. So even the trades that you get in early are going to want to be careful with. We are right next to this 4100, which is a previous, or which is just a psychological level. And then we have a VPOC up here. We've got the 50 weekly moving average above at 41.35 as well. And then we have the 200 daily moving average. At 40.50 down below inside these single prints. So that could be the target that they look to go to on the downside. Surprisingly, the VIX is only at 2057, so it actually went down yesterday as the market went up, which is surprising because you never know what's going to happen around here lately. It's, the news is kind of insane. Let's go ahead and take a little peek around the block real quick. We'll start with the dollar. You can see the dollar got beat down, right? Tried to have a little rise up yesterday as the market was slowly trading down. Was able to trap everybody short. Dollar failed to make a higher high, just as the market failed to make a lower low. Not really a poor low in the dollar or poor high in the dollar, like a poor low in the market, but did end up puking after it reopened in Globex, so it's down 104 now. The Australian dollar caught a nice little bid, trading up to that 68.
I found this on the web.
Sorry, get out of here. The euro back above that well, actually it's not really, it's still kind of struggling a little bit, so we'll still keep our eyes on that. Oil caught a nice little boost today, back up 82. We can see Apple, big rally yesterday. So it's not really gonna be opening up on a gap. It'll be close. It'll be opening up close to a gap. But you see a lot of things kind of turning up here with it. AMD coming right up against trend. Amazon opening up higher as well. Disney coming up right to resistance. This could be a big spot, almost right at the 100 level for Disney. So maybe you see some buying in there. Google L back above that gap, trying to get back to a previous major swing low, which could act as resistance. Meta, big gap up. Microsoft still looking strong. It has been lately. Netflix. Yeah, Netflix really just kind of doing its thing here. Nvidia looking the same for the most part. The 10-year yield, we had talked about it kind of getting a little bit higher earlier in the week. We weren't really a huge fan. Well, we got that gap down and it's all the way gapped below structure, so that's kind of good for us. I would like to see it continue lower. Tesla's looking strong, almost back at that psychological 200. That could be a level to look out for. And then the VIX, like I said, dropped to 20.57. So it isn't back to where it was last week on Thursday, but it is a little bit lower. Still above 20 is an elevated VIX for me anytime. So definitely something that I want to be paying attention to. All right. Now we're ready. Thomas, insane. What's insane? Oh, you know what? I gotta update something. We got 2 minutes. I'm trying to update these sector boxes quick for the new month. XLK export. Industrials. All right, there's the bell. So it's looking to close that gap early on here. Volume comes in below that low, doesn't close the gap yet. Oh, the yesterday's profit. It was a nice winner. So some decent selling early on. Pops right back up. It doesn't quite close that gap. Right back up to the open. Nasdaq's kind of on its low here, which is surprising. Nasdaq's pulled back quite a bit. So let's see if Nasdaq starts to catch a bid here. That could maybe bring the market up a little bit. You can see tech right here struggling, kind of being the struggler of the market so far. Nice. Tech pops up. Back to the opening, or back to the high. Now look for this continuation. We were not able to close the gap. Look at the tick. Tick is still above 0. Breath looks the breath looks positive. The breath looks good for the upside. And we're seeing tech come back to green here. That's what we want to see. We're watching tech and financials to get, keep us in this. Buyers are trying a little bit aggressively here at the high, and they can't really get anything going, it looks like. 12 contracts on that high tick. Let's see if they can pop this. There they go. Right to that 4100. So I would say the A high is probably a little bit mechanical, if you ask me. I mean, the high tick was 99.50, so this is right where all those buyers got stuck. There it is, the liquidation. So let's see how the buyer's response is right here now that we've broken the open. Nasdaq's not looking as weak. They scoop up the offer at the 95. This is where they struggled before, right here at this like 96, 97 area. And then they got that a little tiny pop up above to the 99 and then just kind of died off. So now that they're above the open, you need to see these buyers step up and get that continuation. Breath is still looking good. Tech is going green. Financials is going down still. I would like to see financials maybe pick it up a little bit and stop being a weak little bitch, but I guess we can't have everything we want all the time, so. Nasdaq's popping. Financials is cooling off. Oh, it popped back to 40. Really tight range early on. Still no 0 tick. Starting to make like some lower highs here. Let's go ahead and so you can see there's some weakness in the market here. If there wasn't a little bit of weakness, that the market wouldn't keep going back to the open like it is now. So let's see if they hold the open this time. If not, there might be a little flush down to like 92. Seller's trying to step on the gas here. Yeah, so let's look for 92 if they get some liquidation. Then we'll just watch for their response there. So we can assume that this volume here is short covering until we get back down and start to put volume below it. Then we can assume that it's selling volume. Okay. But until then, that's basically a support, right? Because shorts cover there. So that's where the market bounces at. And you have the gap acting as support right below as well. So the setup here, you see the breath cooling off a little bit. Healthcare's flipped red. Financials has gotten more red. So there's some either profit taking or selling, but we still haven't closed this gap. Nice. I'm just taking a couple quick scalps in here off of this support to try to get a nice little average rolling. Yeah, but see if we start to get volume down here, gotta abandon the idea. Yeah, abandon. Abandon ship. See if they can close this gap. Right at the VWAP as well. VWAP is sitting right here, 89. Offers moving down here. Look to see if the market holds below this 91 or 91 quarter. If it holds below this 91 quarter, there might be some more downside here. There's 91 quarter. This is where they need to offer. They got it. Sellers are trying to keep control here. Oop, they popped above it. Uh-oh. Okay, back to it. This is kind of that key level, 91 quarter. You're starting to see a lot of offering coming in. A lot of buying came in on the 90. But below the 90, this thing will spill. The buyers really need to hold this thing up. So people just basically buying against that gap. And they probably got their stop at like 84. Offer moves down to get filled. It gets filled. Trade it back up. All right, so the market needs to bounce now. It just hit the low twice. One tap, two tap. So now if it doesn't bounce, that's going to show weakness of buying, and then it will probably slam the low. So we need to bounce from here. And by needing to bounce, I mean this thing needs to get above the open, or else it's going to get smacked down. Oof, it's getting dangerous in here. Tech is flipped red. Healthcare is basically flat. Financials is really pressing the downside. The breath is cooled a bit. NASDAQ really the only thing holding the market up right now is the NASDAQ looks a little bit stronger than the ES here. NASDAQ's up 0.36. Dow is down 0.12 or 0.23 and the ES is up 0.27. So it's that lagging Dow once again from yesterday that's holding the market back here. As the NASDAQ and the ES both look like they want the upside. There's a lot of competition around this low area. Like, I mean, really like 90 to even right here, 93. Fed Bowman headline core inflation have slowed slightly, but what else did he say? Expects ongoing increases in rate hikes at coming meetings. All right, so like I said, the bounce needs to get above the open. Notice the tempo on the upside, though. It's fairly slow. We want to start. There we go. I want to start seeing some bumps, and we need to get above the open to get this continuation. Should head above the open if we see short covering. We should head to 4102 probably. Fucking snow in here. It's about to start. Economic data is coming out like right now. And then we've got more in 15 minutes as well.
Give me 1 second.
All right, I've got my stop at 94. I'm looking for 4102 here. I'm just gonna keep it. So the reason I have my stop at 94 is just a little bit of space below the open. Just in case they do a crossing of the open, I don't want to get stopped out at the open. But if it's going to show strength, there should be some buyers right here above the open. So my stop shouldn't get triggered. If it does, no harm, no foul. But it's in a safer spot than just right below the open, I think. Right below the open's too mechanical. So I put it at 94. Very tight range today. If you want to take profit right here at 4,100, be my guest. I guess if you're a bitch. No, I'm just kidding. Bridgie, feel like in the video. There's there's the little pop. Let's see if we can get that 4102. That's what we were looking for. We got 4150 there. Might be time to move that stop up. Let's move our stop up to 98.75 or 99. We go 99. So there's the two. So you could take some off right there. And let's look for the next level up. I mean, you could go for that Globex high, but really I want to go for this 4124. Nasdaq's ripping. So a weak high again, right at the Globex high. Very weak look from sellers. What's the TTV Apex discount code? Apex has the 80% off sale, but the TTV code showing TTV code is. It should be either linked below, where it says become a funded trader. But if it doesn't give you the 80%, then don't do it. Thanks, Roach. Yeah, yeah. The reason I did that is because you figure where these mechanical traders are gonna get the volume is gonna be from weak-handed sellers, and weak-handed sellers are gonna put their stop on the open. And so honestly, you should have just bought the open. That's what we should have done. That would have been the real. That'll be in my journal later. Should have been an ad. But because we have data at the top of the hour, I was being a little wussy, as Jake says, the gender neutral. If I'm quiet, guys, just say something because I'm in a webinar with Peter Resnicek right now, so I'm just kind of listening to what he's saying also at the same time. So, I mean, we're basically just chilling here, so. I found Black Friday on the internet for Apex. Not sure if it was Save 80. Yeah. There's just an affiliate code that we have for TTV, and then we donate all the money to fight type 1 diabetes. Or to cure type 1 diabetes. Here we go. Come on, let's fix the NASDAQ. Just fix its weak high. Come on, ES. Time to fix it. Do your job. Yeah, no worries. It's not a big deal. I've never been a real fan of affiliate links. Like a lot of those crypto YouTubers that basically just got rich during COVID off of affiliate links from people. Weak high stays so far. A little overhead resistance. Trying so hard not to flatten my trade right now. Oh yeah, Jake, I'm not sure, to be honest. I honestly haven't looked into it. It just said hey, this is your affiliate. They gave me an affiliate link, and then I just posted it. All right, there's some news coming out. B period smokes that high. Probably want to just not mess around with this until it cools off. Do you have an affiliate link for FTX? Dang, look at this. What was the news here? We knew we had some economic data at the top of the hour. It must not have been great. ISM manufacturing was down to 49. PMI was down, worse than expected. So reactionary. So let's see if anything actually changes. Okay, so yeah, price moved lower, right? Great, we know that. Volume was already down here. We didn't have the volume up here, but the gap still is not closed, and now we have a poor low. So before you just jump into the bearish ocean, right? We've got to at least maintain some perspective here. You can see relatively nothing's changed for the most part. We fixed that weak high. We do have excess on the high now. It's weird looking though. Doubt that it holds. Yeah, exactly. Like that's kind of how I feel about those codes is like, um, it does that. So there's a close of the gap. Thick barely gets below 0 and then pops. Let's see if they get any continuation. B's become an outside bar now. I want to get involved in this, but I'm just not gonna. I have a feeling like the market's gonna go back to the high. Um, but I don't. I'm gonna stay out. I don't want to get involved with this volatility real quick. I want to let it just cool itself off a second. Let it take a little bit of a bath. And we got Bauman on right now. It's tempting, guys. It's tempting here. Just find your fidget spinner, I think. I mean, you could risk it for the biscuit if you want, but this thing could really puke a little bit. So like it's just so risky. And look at everything is kind of cooling off. Even the Nasdaq breaths come down a little bit. All of our sector boxes are turning red. That tick starts to show any weakness, we could really get some downside. So just refrain, as profitable as it would be to nail it along from the 90 like we did earlier, it's not as amazing this time, I don't think. All right, getting a little bit lower. Let's see if it's going to close that gap. Excuse me. Right to the prior day high. What's that? Nice. Where you're on a 5-minute chart? Nice. Yeah, I caught a nice long and then now just sitting flat. You know, crypto went up yesterday, and that was kind of the reason I was like uh bullish yesterday. We talked about that on Sunday. Yeah. Yeah. Yeah, the settle from yesterday, a little bit of a pop. I want to see. I'd like to see that 4075 get tested, the VPOC. We're entering the top of the spike here now, so it's not good at news until Elon tweets about it. There it goes. See if we can get back down to that 75. Well, that's the thing that's kind of like got me leaning on the downside is kind of like, well, well, I mean, this is just, I mean, you've got to assume there's so many weak buyers in the market yesterday, um, that people are just waiting to buy pullbacks, so they're not going to mess around with these higher prices when they know that they can get it in here, because the 200 MA is down here still. So, but no, what was kind of making me feel a little bit bearish was because of um what's it called, everyone on the news was saying kind of what we were thinking 2 weeks ago or 3 weeks ago now. And so it's kind of like, well, if everyone is kind of thinking that the all the retail, which is YouTube, is preparing for a Santa Claus rally, well, what should they do? They should smack the market down. And we were saying, um if we look at the daily, yeah, you probably should get on for the market open every single day. Remember that text I sent you? But we were saying like even a pullback to this 4,000 level back to the middle of balance is still respecting trend and could still come back down and continue going up from there. So even 100 points lower would still be, to me, you know, uptrend. Yeah. Not that I'm not going to trade the downside, obviously, and I'm not just going to buy and hold, but um, I am gonna, at least be uh, aware of what's actually going on. And I mean, all eyes will be on the Fed coming, soon. Yeah. I mean, he probably doesn't tweet though, Kevin. Like he probably has like a person that follows him around with the phone all the time, and he's like, tweet this, and then he just says it, and then they tweet it. Elon just tweeted it was a misunderstanding. What was a misunderstanding? No, what a liquidation. Would you say last the fold's a bag holder? What does that mean? Yeah. And fucking and like all of the things that he buys. We should really develop a Nate indicator. The radio. He's the fucking best. Yeah. Yeah, unless you're involved in the stocks. Like, dude, that was actually one of the reasons that I got so bearish on Bitcoin when it was at 50,000. When it was at 50,000, it was still on its way up because it went ended up going up like 67 or something like that. But around like 50,000, James's dad started asking us about Bitcoin. And I was like, this old fucker. I was like, it's time to sell. Then you still sold late. Yeah. Oh, Twitter being removed from the App Store. I haven't even been paying attention, to be honest. I'm in this webinar with Peter right now, and I'm just kind of listening to him. No, he's not. He's talking about other things, not the market. Because he trades options. He doesn't trade futures. I mean, he does trade futures, but not like we do. Um, like his level of trading is like so much more complex. No, because he doesn't just trade straight up like that, like a champion. Yeah, he trades like, I mean, he trades like time spreads. He trades like a lot of broken wing butterflies, a lot of strangles, a lot of. He does a lot of ratio spreads. That's what he does. Is the red area demand zone? No, those are single prints from yesterday. Single prints. Look at the breadth. Full 180. All the sectors. Look at tech. Tech was holding the market up, and now it's leading the market down. Nasdaq's down 0.6. The Dow's actually down 0.1 or 1.0. I mean 1%. So the Dow's actually leading the way down. When you say you wrote it down, do you mean like you were in like one trade all the way down, or you were just scalping all the way down? No. A sign of strength from sellers would be to fill them all the way on the first try. Yeah, that's a sign of weakness from selling. Not that we can't continue lower, but the move, typically if this wasn't as much trap selling as it is, because what's happening is as we're getting down into here, people are buying their position back for break even from yesterday. So they're like, oh fuck, thank God, and then they get out. And that's what causes this buying. Well, if these people that are still trapped down here start doing the same thing, but they're like, fuck, what's so close? Like, because they were just down, let's say 50 points, and now they're down 12 points. They're like, oh, fuck, I'm just going to get out for a 12-point loss instead of a 50-point loss that they were down this morning when they got on their computer. So that's what starts to kind of happen. And really, you just, so we can assume the bounce was just short covering, and then basically once it stops, once it stops coming through these, um, we'll kind of know that move is over. But the key here is going to have to be above 68 minimum, is where we can probably get long with the stop, back into these single prints. We're using the spike low as a stop. So you're looking like 68, stop 62. So you're like what's that, 6-point stop? And then you'll target the open. So you're looking for, well, first target would be Globex low. So settle. Yeah, it'll be a tough trade up here. But that's not even, that's, you have to wait until you see the rest of the market start to confirm that, and then you would need to start balancing a little bit and then break that 68 level and also see some of these sectors cool off, because we can assume there's a ton of long inventory trapped right above. So if we've got short inventory trapped here and long inventory trapped here, even on any bounce, we can assume the longs that are trapped here are going to start selling, selling, selling. So there's going to be a struggle all the way. So what will confirm for us on what side we want to get on is going to be our tick and our sectors. Because really, even if this thing bounces but doesn't get like any positive ticks and doesn't get any sector rotation, then back to the downside we go. What do you mean those damn geeks, man? When you can lose even if you're right? It seems like options traders are also fishermen. Love that random reward. Well, the way that he trades options, and this is a Shadow Trader on YouTube, Peter Resnicek, is not like a traditional options traders. If you Google ratio spread, um, be careful because it might hurt your fucking brain. But he does, he just basically manages risk and finds pockets of the market where there's like, random 20s to pick up. So basically, it's like he's just walking around all the time and he's just finding random 20s, random 20s, random 20s all over the place. And they're basically, just like as easy to get as you pick up a 20 off the ground. And then every once in a while, you reach down to grab that random 20 and it's folded and it's got 200 bills inside, right? So that's kind of how he trades. when we just, you figure the 20 is the one multiple, his account's a pretty good size account, so I'm sure it's more than one multiple. Morning, Patrick. Exactly, Jake. Yep, exactly. And instead of doing it nakedly, like a naked trade of the mispricing, he's pre-hedging those mispriced with other mispriced options. So it's like, I mean, he doesn't fuck up very often. So Black Scholes, yeah, I haven't looked much into the Black Scholes model, to be honest. In order to do that, really, you'd have to have like a stack of cash. That's what I don't understand about people trying to copy shit like that. Some MIT level work, yeah. I don't think there was any buyers there at all. Just short covering. Yeah, it's just people buying their positions back. Yeah, the market's just sitting. You bet me $1 that Jim Simmons is a hero of his. Of a hero of whose? Peter Resnicek? I could ask him. C period's opening up. Weak spot here is for 54. What's that? Well, when the market's just giving out free money. Yeah, I mean, definitely can. You're just getting a liquidation break. Think about all the inventory that's trapped. The less time that it, the less, or the more time that it spends down here, the less time that it comes back up closer to their entry, the better odds they are to start to liquidate. Into that 50-50. That's half back, yeah. And the 200 SMA too. Remember, 68 is that level that we're looking at on the upside. A high from the 23rd. Shorts probably got run over there yesterday. Well, they got run over that top of balance, basically. Like, I mean, 13 days of balance. Um, any longer term traders that were there, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Yeah, 13 days of balance. That's where you figure they're all trapped at, or they're all covering from. Oh, Renaissance Technologies? I've never heard of it. It does. The Dow's getting beat up so bad, it's crazy. I think we're good here. Big bid steps up on the 65 quarter. 65 quarter trades. I'm waiting to see how the 68 acts to see if I get into the trade or not, but it's looking good. This may be so that you may have to be quick on this because if we get up to the 68, which is where we're looking for here, we may run straight through it. Because to me, it kind of seems like, and you can kind of maybe use your imagination here. Um, this is so thin right here. It's kind of like single prints. So you imagine that, if we got some, I mean, we have single prints right here. We have some late sellers that came in right here in the middle of this weak spot. So if it gets above this, they might start to cover because they got some room down. So they may cover the rest of their position, and that could cause a run up to like these other weak spots in. So you may have to be quick if this thing does pop, but you're waiting until the 68 trades to make your decision. Peter created like 2 new indicators that he's going to sell in his store soon. We'll see how useful they are. Normally the things that he makes are pretty legit. All right, if the Nasdaq pops here, which it's looking like it wants to, it's getting close. We should be on for the breakout, and you can look to just take it quick up to 74. Let's see this tick make a fresh high on a break of this 68. Little offering here right below the 68, so seller's still sitting there. As soon as they get out of the way, this thing should give a pop. Tick didn't make a fresh high. We'd like to see that tick make a fresh high on the break of 68. There's offers here. I mean, they're still not breaking that 68. See if they can get it. Choke that offer up. Come on. Get out of the way. Be quick to flatten here. Don't just sit in this trade. I actually got in a little bit early. I got in at oh yeah, I got in at 62. I clicked to do a buy stop up at 68 and accidentally clicked limit buy. No. I got in at 62. I added on 68, but I got in at 62 originally because I was trying to place a buy stop order above the price, and because I placed a limit order, it just filled right away. Come on, let's make a fresh high on the tick. Let's go. So as we're getting up to this level and tempo is starting to slow, this is where you're going to want to start getting tight with your risk, right? So depending upon where you're in at, yeah, I mean really don't want to see this thing get below 66.50. I'm gonna cover a couple right here, I think. Let the rest go. I'm still looking for that 74, but I'm just gonna take off a little bit of risk right here at the 70. Hmm. All right, I just took one off at 73 quarter. I just got one lot left running. I'm gonna move my stop to 60. Actually, I'll move my stop up to 69.75. I'd like to stay above this level, so I'll keep pulling it. One lot left. I forgot I got an appointment at noon, so I have to go soon. Mm-mm-mm. Patience gets you paid. Patience gets you paid. I'm about to get that tatted, I think. Right across my forehead. Patience gets. I wasn't even gonna trade today. Well, when they make it as obvious as that, it's kind of like you have to, you know. So here's what we can learn from the rest of this period as shorts continue to cover here at the highs, or at the high of C period. We're seeing how weak the selling is, right? If these single prints close, we'll know that the selling is so weak that it's just not even worth thinking about. If they hold these single prints above, then we can assume that this B high was excess of maybe a longer term seller. But if these single prints close, I don't want to say I guarantee it, but I think that high of the day trades. And with that, I have to go. I've got an appointment this morning at noon, so in about an hour I got to get ready. Well, I got to work out first and then I got to get ready. I'm going to head to my appointment. I know it's a little bit shorter of a session today. I'm going to open up the Discord, share my screen while I'm gone. I'll have my headphones. Let me charge them up right now. So I can still comment in, and I'll jump in the Discord and chat while I'm waiting on my appointment and stuff. But yeah, other than that, that's pretty much it. Hopefully you guys had a wonderful day, learned something, maybe made some money, right? The real purpose of the day is to recognize what the market's trying to do and is it doing a good job, and trade value rather than price. So we had recognized that the market failed to close the gap early on. We took a nice long. The market then liquidated. Some of you guys caught a nice liquidation short, went with it. And then we caught a nice long from 68 up here almost to the 80 with little to no heat at all. I mean, it didn't even come back down to 66.50 when it popped to 68. So you took less than 2 points of heat guaranteed if you took that breakout. But as far as value goes, you can kind of see here, we had 2 TPOs up here, trapped long inventory, liquidated. Now we've got 2 TPOs down here. The point of control shifted lower, so we can assume a lot of buying happened down here. The market moved higher. We had short covering off of these single prints, plus more buying off of that 68, so more short covering from intraday traders. And we're still holding these single prints above. So any return and acceptance in this upper distribution, right? We can kind of see the profile as a double distribution look. Any acceptance back inside this A period pretty much tells us that this area should get retested again, somewhere up here. Not necessarily the 4110, but somewhere up here to test excess, because that's what the market does, right? But yeah, other than that, make sure that you guys are managing risk and sticking to your trade plan, and I will catch you all in the Discord.